Hey traders, welcome back to the FXE YouTube channel. Last week we had a lot of high impact news that gave us a lot of movement on EU as well as a lot of trading opportunities. EU made it back to the extreme highs while DXY created lower lows. For today's video, I was originally planning on doing something different. I cleaned out my charts. I was planning on doing the top-down analysis with you on clean charts and do the markups during the video. But knowing that would make an extremely long video, I decided against it. But if this is something that is interesting for you, then leave a comment below and I'll consider doing that in a future video. But for now, for this video, I'll just focus on the typical top-down analysis and then do a market review of EU and also try to give some ideas for next week. But first, hit the thumbs up button and subscribe if you haven't already. Now let's get into it. Okay, starting with the fundamentals, you can quickly see that it's a much calmer week compared to last week. We have consumer confidence on Wednesday during AM session, and then we have GDP figures as well as unemployment claims on Thursday during AM session. And then on Friday, we have core PCE price index. So PCE is one of the main indicators that the Fed uses to gauge inflation. And then we have consumer sentiment later on during the AM session on Friday. So as I said, much milder in terms of news, so we won't have near as much aggressive price movement like we had last week. Now moving on to the charts, starting with the yields. So you can see they've all come down quite aggressively now. So 5-year has come well into OTE now. 10-year has come well into OTE and also started to reach into the weekly fair value gaps below the daily fair value gaps. And then on the 30-year, it's gone through one weekly fair value gap and it's reaching for another weekly fair value gap that's just below. And the 30-year as well into OTE already. So you can see the yields are just continuing to push down, and it's a strong reason why we're seeing those aggressive moves on DXY to the downside. And if this continues down, then we're likely to see DXY to also continue to the downside. Okay, now moving on to EG next. So as I mentioned before, the euro has been quite weak, and it's primarily due to EG pushing down so aggressively. So that's why I want to put a little more focus on EG until things settle down a little more, and also do a top down on EG. So if we look at EG on the weekly time frame, you can start to build a story of the price action that we're seeing. So we created a massive high here with a huge rejection, pullback, and then continuing back up, not making a higher high, but instead coming right back down, retesting weekly demand. And then as it came back down into the weekly demand, it reacted off of it and started to pull back, coming back into the weekly fair value gap here. And from this weekly fair value gap, having a reaction and then coming back down again to the extreme, the weekly demand. And then since then, you can see we're starting to have a reaction. It's come into the weekly fair value gap that was created on the way down, reacting again. And the way I look at this right now is we created highs here. It's coming down for a lot of mitigation, pushing up back into inefficiencies, coming back down again to inefficiencies, retesting the weekly demand. And if I had to take a guess here, what's going to happen next? I mean, structure is bullish. I'm guessing it's going to start to push right back up from here. So pushing up, coming back down for retest, pulling away, reacting off inefficiencies, coming back down for retest, and then potentially pushing up from here. Now if we go on the daily time frame, so what can we see on the daily time frame? So on the daily time frame, so this is that massive push down that we saw on the weekly time frame. So price swept liquidity on the downside. After that, you can see it's done a lot of consolidation, had that final sweep before aggressively pushing to the upside, came back into the weekly fair value gap, also the daily breaker block, and having a reaction off that. And then now what you can see is it's come back down into demand. So we have a daily demand here where you can clearly see, that it's had a reaction off of. So you can see that with the wick that's left behind below. And potentially we may see it start to turn around and continue to push to the upside. So that'll be confirmed if we break this high right here and it continues higher, clearing the weekly fair value gap. And then if we go on the hourly time frame, so what can we see on the hourly time frame? So this was that massive push to the downside that I showed you on the weekly time frame. This is that huge consolidation that it did for over a week before we had that last manipulation, sweeping all the liquidity before having aggressive push to the upside, pull back to inefficient levels or demand levels before continuation to the upside, creating a break of the range, which can also be seen as a shift. And then once you have a shift and it continues to push higher, so we came back into inefficient levels over here, reacted off of them, and started to react and come back down to retest the extreme. So this is typically what you see when you enter trades. You wait for a shift, pull back to the extremes or extreme of the inefficient areas before entering and taking the trade the opposite direction. So that's the way I'm looking at this. Price is coming back down, back into the inefficient areas. You can see we've had a reaction, gradually pushing up from there. And my guess now is it may just continue higher. So like I said, we need to see a second break of the highs. And then once we get that, we'll probably see continuation further to the upside. Before I move on to DXY, so going back to the importance of why I'm doing the analysis on EG in the first place is if it starts to push to the upside, breaks this high, continues further, that means that the euro has strength. And once the euro starts to have strength and we continue to see DXY coming down, then EU is just going to start flying. So that's the reason why I'm focusing so much on EG in recent days. Okay, moving on to DXY, starting with the monthly time frame. So I've been saying up to now that DXY is extremely bullish. We created higher highs on the monthly time frame, and then since then we're having a pullback, coming into inefficient areas before reacting and pushing up from there. And then now we've come into inefficient areas in the upside, coming right back down. And normally, if DXY wants to remain bullish, we should start to see DXY react and potentially reverse from here, creating higher highs and then continuing further to the upside. But seeing the way DXY is falling and looking at how yields are falling as well and what the fundamentals are telling us, I'm starting to think that maybe we're starting to see a different story here. So I'm starting to wonder if this right here could be a monthly shift So a monthly shift with the break of this demand, pulling back into inefficient areas and potentially continuing further to the downside from here. So I mean, for the time being, we're far from confirming that that's going to happen. But if we start to break the previous low, clear the monthly fair value gap, then there's a good chance that we're going to continue lower. And if we look on the left, there isn't really so much in terms of inefficient areas. We do have a small little fair value gap here. So let me just mark it really quick. And then we have another monthly fair value gap here at the extreme. So if DXY wants to continue lower, I mean, these are really the only targets that I could see DXY reaching for, aside from the actual low, the sell side liquidity. So I don't know, we'll just have to wait and see if that in fact happens and we do see a lower DXY in the coming days, weeks, potentially months. Now moving on to the weekly time frame. So recent price action shows a pullback back into the weekly fair value gap before continuing lower and creating a lower low and also a reaction off the weekly demand. But when I look at this, knowing that there's inefficiencies above, I'm seeing this as just a reaction to come back into those inefficiency before potentially continuing lower. I mean, we have created a lower low, so it makes sense at this point to come back for the inefficiencies before continuing lower. And again, that's assuming that DXY does want to go lower. But at the same time, I mean, like I said, this, if it wants to remain bullish, then this would be the most likely area somewhere in this weekly demand to see EU reverse and continue up from here. But like I said, I'm starting to think we're seeing a different story here. And just one more thing to note, we also have some divergence with EU. So DXY is pushing down, creating lower lows, while EU is failing to create higher highs. Again, that has a lot to do with EG, but as I said before, if we start to see strength in EG, then we'll see strength in the euro, which should start to push EU up higher. Now if we go to the daily time frame, so recent price action shows us that we got a daily break of structure. Price is currently pulling back, and as I said, it's probably pulling back to these inefficient areas. We have a daily fair value gap that was created on the way down, as well as some volume imbalance here. So if I go quickly on the hourly time frame, so you can see we have a volume imbalance here. As I mentioned in one of my daily videos, I was expecting a fill the volume imbalance on this pullback, but it didn't happen. And potentially now we're going to go back and fill the volume imbalance. So on this time frame, I'd like to see DXY continue to push up higher back into this daily fair value gap. And then we'll also see it come into premium levels if it comes, a quarter of the way into the daily fair value gap. And then after that, if it wants to reverse, then see a reaction from there and see DXY continue further to the downside. So like I said, right now I'm starting to have mixed feelings on DXY. It should, I mean, based on what the monthly time frame is showing us, should reverse from here and just start pushing up. But like I said, seeing the way DXY has been falling, seeing the way the yields have been falling, and knowing what the fundamentals are telling us, it doesn't really make a lot of sense for DXY to reverse and push to the upside from here. It makes more sense for DXY to continue lower. So now moving on to EU on the monthly time frame. So Opposite of what I said with Dixie, so extremely bearish, EU pushing down, creating lower lows, and thereafter that having a massive pullback, coming back into the monthly breaker block, filling a monthly fair value gap, as well as tapping OT levels before reacting and pushing back down. And then the recent price action, we see a reaction off of that, coming back up into the monthly supply levels. And normally, if it wants to remain bearish, we should see a shift and EU continuing lower from here. Okay, so moving on to the weekly time frame. So what we can see in the recent price action is bullish PD arrays are still being respected. EU is still continuing to push higher to the upside. We failed to create a higher high, which created divergence with Dixie, more or less stating that euro is much weaker than the dollar as Dixie pushed down lower to create lower lows. And if I go to the daily time frame, so on the daily time frame, it's much clearer. So bullish PD arrays are being respected. We have some bullish PD arrays that were created on last week's drive up. So a pullback back into the bullish PD arrays makes sense. So could come back into this daily fair value gap before reacting and pushing higher and creating a higher high, or it could go as low as the order block before reacting and reversing and continuing higher to create a higher high. That's assuming that EU wants to remain bullish. Now moving on to the 4-hour time frame. So you can see we had that really nice run to the upside last week, and then on Friday we had that nice TGIF trade that brought the price right back down. And you can also see that we have that daily fair value gap here. The 4-hour fair value gap is closely aligning with the daily fair value gap. So if it wants to remain bullish, it would make sense for EU to come down a little lower, sweep this sell side liquidity, come into the daily fair value gap, and then after that having a reaction and then continuing back to the upside, breaking the previous high. Now if we go on the hourly time frame, so I'll use the hourly time frame to do the market review. So we started the week over here. So this is after we created this low here. We started gradually pushing up, consolidating, pulling back. At this point you can see we swept some liquidity, but in fact this was the potential shift. And then after the shift we had a manipulation, breaking the previous highs, coming back into the demand supply over on the left, and then after that driving to the downside, coming back into the hourly demand. And the hourly demand held, and you can see we had a huge reaction off of it, then some consolidation, and then coming into Tuesday consolidated some more during Asia, and then at the end of Asia we started to push up and we created a second shift, giving some indication that it's going to continue to the upside from here, pulling back to inefficient areas before continuing further higher. And then at this point we didn't break the high, we consolidated a little, and then during New York we had a massive impulse to the upside, breaking the previous high, giving some confirmation that it's very likely to continue higher now, aggressively pushing back down to inefficient areas. So we had an hourly fair value gap right here that it tapped into. It also tapped into hourly demand just below that as well. Thereafter, having a reaction off of it, coming back down, retesting, and then continuing to push up towards the end of the day, where we had some consolidation. And then Wednesday we started to push back down to go for mitigation of the demand. And then you can see we had a break of the range here, and then continuing lower during the end of Asia. And then during London, we had a pullback, sweeping the previous highs. And then after that, shooting down back into the hourly demand. And then from the hourly demand, had a little consolidation, and then a push up. And then continuation on the next candle before coming back down for a retest. And then a really aggressive push to the upside, creating another shift, breaking the previous range high, and then one more pullback to retest demand before a really aggressive move to the upside. So this really aggressive move to the upside happened when the Fed interest rates were announced, and you can see it just shot up. So this is one hourly candle that went up like over 100 pips, I think. Yeah, like over 110 pips. And then after that, we had pullback, some consolidation, and then on Thursday, we immediately pushed to the upside, breaking the previous highs, so already giving confirmation that it's going to continue higher. And then towards the end of Asia session, we started a pullback, and then during London, we had a really aggressive pullback back into demand, and then once we tapped into demand, had a really aggressive push away from it, and then London continued further to the upside, and then when New York came around, we had a pullback, retesting inefficient areas, and then after that, a really aggressive push to the upside. So this happened when we had the ECB interest rate announcement. So you can see it was kind of sloppy, pushed up, pushed down, and then pushed right back up. But ultimately, it did continue to push further to the upside, once again with a really huge move to the upside. And from here to here, I believe that was also another 100 pip move. So 100 and nearly 30 pips on Thursday's move to the upside. And then after that, we more or less topped out. And then after we topped out here, so had a pullback, did some consolidation, and then during Asia, we pushed down, and I misread this. So during my daily analysis on Friday, I saw this as a sweep and was thinking that price was going to push up, sweep the highs, and then after that drop down. But instead, this right here was a confirmation. So it created the shift here, pushed back up into the hourly supply, had another reaction off of it, and then during London came back for a retest of the supply as well as the daily open. And then after that, we had the PMI announcement, which it was a France PMI announcement that initially shot EU to the downside. And then somewhere around this area, we had the German PMI announcement, which continued to push price to the downside. And then we had a pullback back into the inefficient area, so the hourly fair value gap tapped into it. And then New York drove the price down. And then we had the New York PMI, which saw further continuation, driving the price further to the downside, and it just continued lower and lower and lower after that. So this makes a lot of sense. So as I said during the daily video on Friday, I was expecting price to come back down for a TGIF trade, mainly because we just pushed up the entire week. So I was expecting a wick to be created on the weekly candle, so a pullback on Friday before we saw any continuation further to the upside. So if we look on the lower time frame, so I can give you an idea of what I'm thinking about early in the week. So right now we've come into this demand area. So you can see we're starting to react off that. So the way I see it now is here we came back into a 15-minute fair value gap, reacted off of it, and started to push down. Haven't created a lower low, haven't gotten a confirmation yet. But if we do break that low, then I'm thinking maybe we'll get another pullback back into inefficient areas, either the fair value gap or the supply. So let me draw this. So if we break down and break this low, then I'm thinking we'll get a pullback into inefficient areas, whether it be the fair value gap or the supply. And then after that, see continuation lower, sweeping this low, and then coming into the daily fair value gap. So this is what I'd like to see. And again, it doesn't have to be this fair value gap. It could come back to this supply as well. And one other area that I could see price coming back to is this supply right here before reversing and coming lower. But at the same time, there is a possibility that price pushes up from here, breaks the previous highs, pulls back, and then comes up and targets this hourly fair value gap before reversing and coming down to target the daily inefficiency. So this is what I'm looking for early in the week, and then maybe later in the week, so maybe Tuesday or maybe even late on Monday. If we get this move to the downside, potentially it could reverse and continue up at the end of the day as early as Monday. But at the same time, I wouldn't be surprised if it did a little consolidation in this area, so coming and playing around in these inefficient areas before coming down maybe into Tuesday, where we create the low of the week, and then reversing and continuing higher. So that's the way I'm looking at it right now. So early in the week, either consolidate before coming down or having a deeper pullback before coming down, and then after we reach the daily fair value gap, look for signs of reversals. So if we get some sort of a shift in this area, then looking for longing opportunities to take it right back up, and the target will be this high as well as the previous high that's just above it, like 8 pips above it. And then if you can do that, then we'll likely see further continuation to the upside from there. Anyways, that's it for this weekend's analysis. Hopefully you guys found some value in today's video, and if you did, a like and a subscribe would be appreciated. Also, I haven't mentioned it for a while now, but if you have any feedback regarding my market analysis, please comment them below. Enjoy the rest of the weekend, and I'll see you for the next one. Peace.
Black Swan.